Most people think buying dividend stocks means hunting for the highest yield possible. They see an 8 or 10% payout and think they found a gold mine. But what most people do not know is that high yields are often a trap. A massive yield usually means the company is in trouble and the stock price has crashed. When that happens, the company almost always cuts its payout to save cash. This leaves you with a collapsing stock and zero income. The real trick to building true wealth is finding companies with incredibly safe, growing payouts. You want to buy them before the rest of the market catches on. Today, we are diving deep into 5 rock-solid dividend stocks from the US, UK, and European markets. Let us start over in the US with a household name that is on the verge of making history. McDonald's has raised its dividend every single year for 49 years straight. That means this year, it is officially set to hit the legendary 50-year milestone. It will formally become a Dividend King. Right now, it gives you a very reliable yield of around 2.6%. But here's the secret that most beginners completely miss. McDonald's is not actually a burger business. It is a real estate business. They own the land under almost all their locations. They collect predictable rent from franchisees. This means their cash keeps flowing in no matter what the broader economy is doing. Even better, they keep buying back their own shares. This naturally drives up the value of the stock you hold. Before we move to the next stock, consider this vital concept. A great dividend company needs a conservative payout ratio. This is just the percentage of profit used to pay shareholders. If a company earns $1 and pays out 90 cents, it has no room for error. McDonald's keeps its payout ratio near 60%. This gives it plenty of breathing room. Now, if you want something with a much higher upfront punch, our second stock takes us into the tech sector. Verizon enters the year with a massive dividend yield sitting right around 6.6%. Usually, a yield that high signals danger. But Verizon has increased its payout for 19 consecutive years. Think about your own monthly expenses. People might cancel a streaming subscription, but they almost never stop paying their cell phone bill. That essential recurring subscription revenue gives Verizon the ultimate cash cushion. It allows them to keep paying you month after month. The surprising part comes next when we look at the UK market for our third pick. Many investors look right past consumer staple companies because they seem boring. But boring is exactly what we want for predictable income. Unilever is a British giant that owns brands like Dove, Hellmann's, and Ben & Jerry's. Millions of people use these products every single day without even thinking about it. Right now, Unilever offers a very healthy dividend yield of around 3.6%. Because they sell everyday essentials, they have incredible pricing power. When inflation pushes costs up, Unilever can simply raise prices on a bar of soap. Consumers will still buy it. This predictable cash flow makes their yield incredibly safe. It positions the company for steady growth. If you are enjoying this deep breakdown of safe income strategies, hit the subscribe button right now. We track the global markets every single week. This helps you spot these under-the-radar opportunities before the retail crowds pump the prices. Now, moving across to mainland Europe for our fourth stock, we find a massive opportunity in healthcare. Sanofi is a French pharmaceutical giant that is heavily overlooked by retail traders. While everyone is chasing flashy AI stocks, Sanofi is quietly generating billions in free cash flow. They produce essential vaccines and consumer healthcare products. The global population needs these regardless of economic conditions. Right now, Sanofi offers a stellar dividend yield of around 5%. The best part is their massive pipeline of new treatments coming to market. This ensures their earnings will continue to scale over the next decade. Buying a company like this gives you a beautiful mix of current yield and ultimate safety. What most people do not know about our fifth and final stock is that it completely changes your payment schedule. Most dividend stocks pay you 4 times a year. Realty Income is a US-based real estate investment trust, or REIT for short. This company actually pays you every single month. They literally call themselves the monthly dividend company. They own over 15,000 commercial properties. They lease them out to highly defensive tenants like grocery stores, dollar shops, and pharmacies. Right now, you can lock in a brilliant 5% dividend yield. Because the real estate sector has lagged behind tech lately, this stock trades at a discount. You are essentially buying high-quality real estate income on a sale. Before you skip to the end of your research today, remember that the stock market moves fast. Major shifts happened in the trading sessions just hours ago. Make sure to catch our next video where we break down the biggest investing mistake everyone makes in July 2026.